start with the software portion. So what basically say, we have a lot of options. So I'm just showing you this. I'll show you live also at the same time. Or maybe I'll minimize this. You can see this, na, this way. So then I'll keep it easy so that every time I can show live and then come back here very fast. Okay, so most important is we have a very powerful thing and you can easily use it. See, it works like this. There are three major portions you can divide the strategy. One is the price analysis tool. Okay, one is the OI analysis tool, and one is the paper trading and live tracking tool. So there are three portions you can divide, and strategy board. And all these are available in a single dashboard, which is known as option strategy dashboard, option screener dashboard, which has everything has been combined now. But I'll show you separate also. Okay, so if you go to the website and you see that, so this one I've shown you. This is the option, basically the chain analysis where you see the price. Okay, when you look into this, this is option. Then you have option calculator and option analysis to give you target and stop loss while trading options. So this I will show you in the dashboard only. So now if you see both dashboard, first let me check whether I'm offline or online, because maybe I'm still online. Okay. So no, I am not gone. It looks like I am not gone. Oh, yeah. No, I am not gone. My name came. So I'm there. Okay. So now if I go to this, so in option analysis, if I open, there is a calculator built inside each one of them. Okay, I can use it to forecast options. So suppose I click this option, say 9150. Okay, if I click this option calculator, it will open the calculator which will have all the Greeks inside it. So you can see Greeks, there is a Greeks. Delta is 0.44, theta is -4.5, gamma is 0.00372, vega is 4.62. And this, so this tells me exactly, and this is what currently when it was calculated, it was 6 days to expiry that time. Okay, so Monday it will be 4 days to expiry. So this will get changed. Now, if I want any target or stop loss, just change this intraday and you will get a target stop loss. Suppose I say intraday I want a target for 9050, or say target for, say it will go to 9150. If I recalculate, it will become 50 rupees. So that means this option which is 35 will become 50 rupees. Now I also know the current volatility is around 9% for call at the money kind of thing. You can also double check. You can also have an option Greek and you can click on that and check, or you click on this and you can check. You can click on 9100, which is at the money calculator, and look, these are all will be around that same range. This is current month option calculator. Okay, so see 8.67, so 8.7, around this is your option. So suppose now if I want to calculate for any option which is not liquid, what I need to go? Just go to that calculator and use the same as a benchmark, because this becomes your benchmark. This is implied volatility. Na? Implied volatility is implied in the price. That's why it's called implied volatility. Use the calculator to know what is the volatility, and we use it to feed back to another option to get the price of that option. Now suppose I was not sure now what is the price of 8,550. So now I'll go there, click on this calculator, and you will see I'll get very absurd IV. Because the price is absurd, na? IV will also come absurd. See, 6.83 is obviously not right IV. It should be somewhere close to 8.67, something like that. If I calculate this, one second. Where is that 575? It became. One second. Now it is 522. Why it's showing 583? I was wondering. Okay. So it was not correct. 575 only it showed, initially. Okay, 580. Okay, for some reason it's showing 5. It should be 575. But anyway, I'll put 8.67 and recalculate. So I think it automatically took 5. Okay. So basically it is around 583. Okay. Now that is your normal fair value price. So it is not 575, 583. So now if you go and check what is the here offer and bid, 549 and 601. So if you try to sell at market, you will sell at 549 and 575. So you have to sell at 583. So you should put a fair or market order at 584, 585 and then reduce it. And whenever it got sold, you will get sold. You understood? This is how you sell options. You figure out the right price using the IV by changing the IV to that IV, and then use that as a benchmark, because the price which has got traded may be very old and that may not have any validation. Like look at here 563. If I click there, it will give you some price which is obviously the IV will also come very absurd because it is not the right IV. But how do we know the right IV? Because you went to add the money now. We went to add the money. See now it's 55% because that price is not correct. So change it to the right IV, which is 8.6 like that. Add the money IV, and now you see 484 is the price. So now you see what price it got traded. It was trading between 449 and 501. So 484 is where you will actually get traded. Now you keep trying, you will say it's not trading, it's not liquid, but actually it can be sold even if you are having it. So you can use this method to calculate the right price for any option, for anything which is illiquid also. See, there are enough computers ready to buy. You put the right price. See, they have put at 449, because some fellow will come and sell there, then he will make 40 rupees free. So he's trying to he's put some, who is interested to buy that option, I don't know, but he's putting an order there. Obviously, no human is putting an order and waiting there at 449 rupees, so much in the money. 1 day before or 4 days before expiry. It's a machine only. So machines will transact with you. There's enough number of machines trying to give liquidity. They want, for them, small value is also profit because they are doing in huge volume. You give their small margin and sell your item. So nothing is not sellable. I'm saying everything is sellable. If you are holding, just add the order and keep reducing it. Suppose 484 I place. I'll reduce it 483.50, 483. It will get sold at one price. Because by the time next time I went to change, I'll say already sold. Because machine also are competing now. One of them will find this good enough. So they will come and buy it. So machines are also not one. Remember, there are 10 machines. Moment it comes in their buying range, they will snap it up. And that becomes the next LTP. You'll see. After that, nobody would have traded for long period. Now that price you can see for long. These are illiquid options. Means you can see why is not there, much is there. So there is very less trade. But still, if you are holding everything is sellable. There is nothing which is not sold. There is a price for it, and there is a way to figure out the right price. Otherwise, you will keep thinking what is the price, and simply trying to sell it. You try to compete with, what happened? You try 501. You put 500. You become 499. It will compete with you till it comes to a range where it will not compete with. You know why? Because you are trying to sell at fair market. It's not interested in selling at fair market. It's a machine, right? It will have its margin of profit. But till that time it will compete. If you try to compete, put a 500 Monday, it will not get, nobody will buy. Don't worry, because nobody will buy at 500 also. If you put a sell order at 500, it will go 499.95. Because this is a machine. Instantly it will react to the price. It will race with you. Till at a point, it will stop racing. It will say you are too interested to sell, then what? So it will allow you to go ahead. At some point in time, you can beat it. Machine will not compete permanently. It will not compete till 449. Much before at 490 some level it will leave. Because it will decide it's not worth. You have decided to sell at any cost, what? Understand? So you can sell any options and buy any options if you require by using this, but you have to use limit orders and then change accordingly. Is it clear? So understood how I did for fair market. So this is what all I can do using calculator, and calculator also gives me those Greeks also when I do that. Okay, so it allows you, and you can put the target stop loss. So intraday target stop loss very easily I can put. Suppose I am trading this option and I want to put an intraday target stop loss, so we can put it very easily. Each option I can just put a target and stop loss and easily figure out where to put a target, where to put a stop loss, and trade intraday trades also. Okay, or positional trades also. Second is option Greek. So this is what I was saying. So there is an option Greek calculator. This is the same thing. Okay, that I click that, it opened that. This just now I opened in live, and then you have this entire option analysis, option Greek. So if you click on that, on this button, there are Greeks here, Greek chart. So if you open this entire thing, you will get it. So if I go to the same page here, option analysis page, on the top side, you will get all this. Option pane, option Greek, all this will be available here. So if you click on this, say option Greek, it will open the entire option Greek for everything, all the strike price in one stroke, you can see. So this becomes a one tool for you to watch. So like this, for all the option price, all the Greeks, all the IVs, everything is visible in one stroke. So you can just have a look at what this is for this month and then next month. So this is now here it is taking 4 days. So it is doing as per Monday. It is automatically 4 working days are left now. So these are the things which are. So you can use this, and now if you use this and then go go above, and same thing you can also open from the dashboard. So if you go here, go to the dashboard, there is an option Greek chart here. So you don't have to, everything is here. So you don't have to go there and do it. Okay. So you open the same thing, see the same thing opened here also. So you can open the same thing from here. You don't have to open. So you can open option analysis from here, option Greeks from here. Okay. All that can be opened. So this is the complete Greek analysis. Then comes to the next option IV charts. So option IV charts are here. These are option IV charts. Again, same thing can be opened here also. You have option IV chart here also. Okay, you can open here or you can open there. There are various options. So if I open from here, so it will give me an option IV chart. Now, if I see there almost it gives me for 5-6 months. So you want to zoom for a particular, like suppose last 3 months I want to see. So what I'll do, I'll just zoom because from April till date. Oh, this is only one. So I want to zoom. So just click on this select and then select like this. So you will see for 3 months. So you can see these are high areas, these are low areas for Nifty. These are not all time high low, but these are temporary. But these are basically Nifty is in normal area. It is not moving much recently. It had moved very strongly for Brexit or it had moved very strongly, but these are basically, so that's why Nifty is coming as normal. If you saw the Nifty chart, it's showing normal. That IV analysis here, we have put in the dashboard itself.
What is the line from the top, yellow and the red?
Yeah, that is here. Future volatility also we plot, annual volatility we plot. So this is for cash. Cash, what is the actual volatility of the stock in the past? This is historical volatility. This is employed. This IV here is the same IV here. Future is past volatility and these are past volatility. Cash volatility and future volatility. That is showing because eventually what will happen? The past volatility, future and employed should be similar. Na? So it just tells you how much it is away from past volatility. Past volatility is also around 10-9%. So it is currently that 10-9% is normal only. It is not too much. So the highest of these are the, like see it went to 28%. But if you look at, this is for last 1 year, these are the highest point. This in November it went, in the before Brexit, before February, this you know where? Budget day. These are the point it will go. See, before budget it went up so much, or before it will go up so much because budget came on what 29th first before January. So it will be before this. You have to go even before. So it will peak in those period of time. It won't generally peak. See here, it will peak somewhere here, 1st of January. So here it was 30th January was the highest, 17%, and then it came back to 11% after budget. So in budget it was 18%. So you know what kind of volatility is. So that's what I am saying. See here, na? This same thing you can see. 30 January was highest. Next day after budget it fell 4%. Then it came down, and then it became normal. So this is normal area. This is temporary. This is high area at this point of time. Obviously, for some extreme event happens, then election and all nothing is there, na, right now. But when this happens, it will spike up. So this is your volatility chart. So that's why now you can see from here. What we have done, we have added here this information here itself. Here itself we are giving normal. Same analysis we are writing there. So for you, you don't have to break too much. Any stock you open directly tell you high, low, normal. Because even our software can read that chart. So it reads the chart and put the current evaluation. So it will automatically tell you whether it is high, whether it is low, normal. You can see here itself. Or you can open the chart and make your own analysis. Okay.
How do we interpret that put call ratio?
I have not finished yet.
No, in that chart, right? Why is there a large variation?
Every month it is. Every month it is. No. It just falls in the last minute too much. That's all.
Oh.
That's right. Last minute it's falling.
It can either max it can go to 0. Right?
No. Theta value. Theta is very exponentially very high near expiry. Na? Since it's negative, the plot is like this.
Time, right? So day wise, right?
It's day wise.
So it can be only 0 at the end, right?
It's not plotting the end point. It is the last day when it closes, it plots not the 0 point. Okay. It plots because next day it takes the next working theta. So it plots, so there is a theta for that day. So I'm saying, so it will end always negative and then again it becomes normal, again negative. So it is like this chart. Because it becomes very sharp. Because it's negative, na? So negative values get plotted down. 0 is the higher line, right? Plotting like this. Okay. Now, so here also, so it's available here. It's also available here. You can open and check the IV chart here. These are IV chart. These are for call, put, and this. So you can check IV chart for each one. They will have similar IV charts. Okay. So you can do IV chart analysis from there. Then next one is, we go to, so this was the IV chart, for example. This was during, this again, this is like election or budget or something of that time. Okay. So this is implied volatility. Now you get a live option chart. That you click and it will, that option chart is your standard option. That you have seen that opened so many charts and so. If you click on an option chart, it will open the candle charts of the option. Okay. Then next one is the, now we'll go to OI analysis. Now here your put call ratio and all that will be answered. The first one we'll take is the put call ratio. So this is a put call ratio. Put call ratio is a very useful indicator in terms of what? So let's plot put call ratio. Here it's available, put call ratio. So you click on put call ratio chart, it will open the chart. Same chart you can open from there also, here also. I am opening now everything from dashboard. This is the put call ratio chart, and again, like this is also 3 years chart, so you want to only see recent chart. So there is a pattern. What is the pattern in the chart? Every time the stock reverses from a bottom, it will also make a bottom here in put call ratio. Okay, so put call ratio is also a top and a bottom in the chart, but the difference is put call ratio sometimes bottoms earlier to the nifty bottoms. Why is this happening? What is put call ratio? Is the open interest, right? If put call ratio has fallen down, what does it mean? Number of puts to number of calls have come down. Why will that happen? When market is no longer getting worried about fall. If am I worried, I'll buy more puts. If I'm no longer worried, what will happen? I'll sell back the puts. That means market is expecting a bullish turnaround. So when put call ratio makes a bottom, Nifty is also likely to make a bottom. So it becomes a pattern indicator, because you can see a candlestick reversal, you can also see a put call ratio reversal. So put call ratio reversing is a pattern indicator of not technical analysis, of OI analysis. It's a quant analysis. It's a separate, it's not quant technical, because you are not using price action. You are using OI to determine a change in price, because it is very map. You see the highs here and the highs here are similar. Okay, so when it makes, but why will this, because, so that shows now these are two different variables. This is price, this is OI. They are not collected. There is no calculation here which uses price, but still it mirrors the price. What it means? That means it is a very highly predictable parameter or confirmation parameter. If it happens, if it bottoms together, it's confirmation. If it bottoms early, it's an early indication that expect a bottom in 1 or 2 candles. Because the people have stopped worrying about it. Who? Big people. Big people are who? FIIs and DIs who have ability to hedge have stopped hedging anymore. Means they are buying, they are selling back the puts which they were holding. That means their put to holding number of puts to calls, that ratio has hit a historical low. And whenever it hit historical low, see this is a historical low. The market is also hitting a historical low. See, this is 7.9 is a historical low na? In near times. Put call ratio is already bounced. Next time when market again 7.9, it was already higher. So there is a positive divergence. Can you see? It already hit here itself. 0.66. This is a historical low. Last time it happened here now, you have to go back. 0.66 was at somewhere when Nifty had hit 6,800, 900. That time it hit. So it shows you those lows. If it hits that historical low put call ratio, it's also a low for a long-term low of the Nifty, which is likely to happen. If it is anyway, I think reversal itself is one clue. And if the value is like 0.66 or 1.66, either side extreme values, those are extreme values of reversal. Because if you have bought so many puts, that means you are extremely worried about market turning down. And if you have bought so less put, that means you are extremely confident of going up. Because you are basically unhedged yourself. Na? You have more calls than put. I mean, where is the hedging? So that means there is no more hedging happening. You are holding more calls. Calls to put to call ratio is a useful indicator to figure out how the market is going to move. It's a pattern indicator.
There are two noises also in between, which might.
What is that noises? What it is why will I buy puts when I am worried? So why will this spike happen? Because you can check the date. What is January 23rd or 24th? There must be a reason why it happened. No, it was much before. So there could be an event like some international policy, like Trump coming out with some policy or Fed coming out with policy. You can go and check. That must be a Fed policy. So what will happen if they are very much worried? They will buy a lot of puts. And second day, if today I spike and next day spike comes down and the price trend does not change, what is it? It's a very strong confirmation indicator for price to continue to rally. So from this point, you see what price did. Once this came back, what this became? This became a highly bullish continuation indicator. And you see the rally from this point to this point. You know why? Because it means that they were worried about certain thing. That thing never turned out to be worried. So immediately they offloaded whatever. It was just one day they added. It's like, so this is also very useful. That if they add a lot of position, and even see in Nifty you can't see this spike, but in this spike coming down is a very strong continuation indicator. It could be obviously in this case a bullish indicator.
So the volatility would have implied volatility would have increased.
This is not implied volatility. This is put call ratio.
Yeah, but I'm asking.
Not necessarily. It could or it could not. It might be. You have to go in demand because the demand of puts went up so much. So it might be that IV also must have peaked because it's a tension event. Nah? So IV also will have, should have. It's a good point to correlate. But because they bought so much extra put, now suddenly your ratio from previous day goes to 1.6 next day. That means a lot of puts have to be bought to make that ratio to happen. And next day you bring back that ratio back. That means you sell back whatever you bought. It was just a one-day protection you bought. So if I do that kind of thing, when they see a very critical event, they do it. And if the critical event does not turn out to be a dud event, that nothing simple, then what happened? That is a very strong continuation signal that whatever trend was running will continue to run. It's not a trend reversal, it's a trend continuation.
But there would be a time gap. For example,
No, it will be
tonight I see that because of the implied volatility is very high.
not implied volatility. The put call ratio is very high. So there must be event overnight.
Right.
Suppose Fed comes out with a night result and that is nothing special about it. It says that I am continuing whatever XYZ. Okay. So next day morning they sell back all the put. And when they do that, price is also moving strongly. There's no, it's very clear on the chart. So what it means is that they are no longer worried. Whatever trend is moving is expected to continue.
My question is, suppose after looking at the put call ratio,
it's a one day.
Suppose I take a strategy for tomorrow morning, it's going to fall.
Why will take tomorrow morning? You, after this happens, after this event, you will take the strategy. After this spike is gone down, then you will take the strategy.
Oh, okay.
Because what if that event they didn't close the put? Then the put will remain here only.
Okay.
And the price will correct very sharply in market.
Okay.
Why are they buying put? Because they are anticipating a potential decline.
Right.
If potential decline does happen, then the put call ratio will never correct back.
That's right. Yeah.
It will start making in newer peaks, right?
Yeah.
And market will make a lot of correction.
Right.
And they will be okay because they have hedged already because they have bought so much puts.
Right.
They unhedged it, shows then that see from 1.67 they went back to 0.9. Shows what? They unloaded back all the whatever they bought. So it's an overnight loading of position for some overnight event. It looks very much like that. And you can go and check on that.
If it stays for 3-4 days at the same level.
No, it's same level. That means they bought it 3 days before and they're waiting for that event to be over. There must be some event, known event happening. Because they are only buying for some known event. It's not some hidden thing happening. It's a known, it's like suppose for some reason, it's like a trust vote or some very important significant which can make and change their opinion about market.
Maybe something similar to that happened here. It went up sharply here.
Yeah.
That is Trump. And
here the market corrected and then they started loading the market. See what happened. First it corrected down, right?
Okay.
Then the market recovered.
Okay.
And when market recovered, they immediately started buying puts.
Okay.
Because now again market has gone up to the values where they like to buy puts. They had already unloaded the puts, na? They're unhedged. So now this is like a trend. This is like in line with the trend, and trend itself reversed. Because they're unloading and hedging. It's a part of the process now. Because again when price goes up, they'll start buying the puts.
Okay.
Because they have to hedge now. Because now they are sitting on profits now. Because they unloaded all the hedge. Now they are not sitting with any hedge. So they will do that. But it reaches extreme is where they are concerned.
Okay.
So extreme only comes and extreme corrects immediately. Otherwise, it can mark a major fall in the market also.
Okay.
So that point is a point which is like a make and break for market. Next day market would have been like the high of the market. Market falls. Last time,
Yellow line would have come down.
Yeah, yellow line would have come like this, and this would have gone like that. It would have been probably a major change also. So that is because that's why they are holding that. They went to that. These are extreme bearish positions. 1.67, you can see is very early. I don't have 3 years more year chart, or I have to expand more year chart to show that when was that? When was 1.67? See 1.67, 1.67 was here. When market was last time 8,900. You know what happened? From there it corrected to 6,800. So these are historical highs. No, not election. This is February 2015, before our market correction. When market reached 8,900, that time 1.67 was seen. So 1.67 is not very often seen. It is seen means there is a perception which they want to take, and that time it did work out strongly for them. So these are historical. And look at the historical lows. at historical low. Like this was historical low now. What was Nifty on this historical low? When market hit 78, it was hitting 6980, and here again it is hitting here. So these are all near term lows. 8,000, see 6,000, 8,000 something. What was it here somewhere? 1.73. 7829. So these are all lower points of the market. All these when this is hitting lower, because it should bottom and then it rises back. That means they have understood this is bottom. So turning around a put call ratio becomes your short term signal, and if it is hitting historical low high, it's a major signal. That's the interpretation of put call ratio. So put call ratio is also so basically any turning around or any sharp increase or sharp fall in put call ratio has to be monitored in line with the market. So that's why what next we have done is we have made a screener for put call ratio, where all the stocks where major change in put call ratio happens are highlighted. It does not mean that it is bullish or bearish. You have to go and apply the chart, because it's a change of something. Suddenly it was so much, why it has suddenly gone? Because it can be. So if for that you have to go, and there is a put call ratio chart. We have a put call ratio screener. So there is a screener button there. It will actually highlight where the maximum changes happen. Like 100%, it was 0.56, 0.27, suddenly it has become 0.5. It's 100% jump. So in percentage terms, it's like you can sort it down where maximum jump has happened. Now you go and check on these days on these stocks, there will be something happening also. Why suddenly put call ratio is going up? Is fear setting in? If you look at these stocks were slightly bearish around that time. So these guys actually, so when people suddenly bought extra put and suddenly that is going up, it could be marking an important signal for. So it is shown, but anyway you have to apply it along with your price chart. This is a signal for you to be alerted that option traders have got some insight, they are buying amount. Suddenly, which are these guys? Their puts call ratio has suddenly changed to maximum. So this screener is available on chart, and you can use this screener. It's
changes overnight, sir.
Yeah, it's a real time.
Real time.
Yeah. So it compares with previous day. So obviously you have to compare it with previous day. Compared to previous day. Real time compared to previous day. So you have to go to option screener, option X, and here you get the put call ratio. Inside this.
So
you click on more.
You see that of a company, we can make out what will happen
in this put call ratio analysis. Yeah, the real time option in this put call ratio analysis. Or one second. Okay. So yeah, I'll come back to the dashboard, option dashboard. Okay. So you can check what is the market trying to do at this point of time. Okay. So here example input call ratio right now is turning down because it has gone up and turning down. So if it is also turning down in price chart, then it's a signal for that. Even option traders also expect price to decline further. So it's a negative signal for Nifty at this point. Because Nifty is negative on chart, Nifty is negative on price chart, Nifty is negative on OI chart also. OI put call ratio. There also it has gone up and coming down.
Should we interpret anything between the gap of the closing price versus PCL?
Gap is no. You have to look at the trend of that and trend pattern. Trend pattern in Nifty price chart, trend pattern and the patterns in this. It's a pattern. It's nothing to do with gap. It's pattern.
This is what I mean. Looking at the chart, right? The longer the gap, the trend is continuing.
So that is a trend example. So I'm saying you apply that for trend understanding. Don't apply that here. This is for pattern understanding. Okay. Now we go to the next one. So you have the screeners and then you have the put call ratio chart. In put call chart, this is put call not ratio. This is put call chart. This is where the put calls are maximum stacked. So what you do in this case is again go back to here, and this is the put call chart. Where is the put call chart? Sorry, it will be there in the this put call chart. So you come here put call chart. It is here also. One second, I missed somewhere in the dashboard. It's there. Support resistance was mentioned not there. Here, this put call chart. If you click there, this also will open the same chart which I was opening there. Okay, so it will open because this shows you support resistance indicator. This information. So when you plot this, okay, you got it. Now what it clearly shows is Where is the maximum resistance? Where the maximum calls have been opened. So 60 lakhs calls are there. That means this is the where maximum resistance is. Because you see, before that 32 lakhs, 43 lakhs. 9,200 is very strong resistance. Similarly, look at put. Where is put making a top? 44, 41, 50. So this. So 9,000. So now you can watch this. These are your support. This is your resistance. So this tells you support resistance directly like this. Nearby support resistance, obviously. Okay. And if you want, if one this is broken, because nothing is permanent. Anything which is broken, and if you can compare, actually you can compare also. Relatively, which is more strong? Resistance is more strong than support. Relatively, you can compare with the values.
Yes, sir.
Okay. So this tells you what kind of support resistance exists at this point of time, which is likely to break, not likely to break. So, and once it breaks, then you will see new tower coming in. Suppose one tower goes, what happens? People will move positions. So throughout the month, you can start observing. After 1 week, it will be formed. After 1 week, in any new expiry, these are done. Then you start observing throughout the month. You can observe. It will show when that it breaks. Now you can see which is the next level, which will be support. You can immediately check from here. It will new tower will come up. Okay. If that is broken and new tower is not coming up, that means that support is not broken theoretically. Because the put call ratio should change. Now, option traders should shift positions if they think that this is going somewhere else. If they are not shifting position, it's actually giving a signal that it looks broken, it may not be broken. Because they are not rotating. They are supposed to close this position and sell further down or further up, depending on which side is broken. Okay. So that's why. So this is, here we have printed that information. So either you can watch the chart and now it is available here directly. So this tells you what put call ratio is telling you. Okay, put call chart is telling you where Y's are stacked up, where maximum number of positions are stacked up. Okay. Now these are the things. Now we come to the next question. So you get support resistance, it provides you support resistance. Last question in OI important is the OI tracker. OI pain tracker. What is this? See, when who has the pain? The option traders, option sellers face pain when. See, he said, like he said, now when I sell option, do I do anything? No, your option is blocked. You get the credit of the premium, and your margins fluctuate every day. Your margin is blocked. That's all. When does he settle? He gets premium that day. The day he sells the option sell back, then he buys the option back. Then he has to pay the premium. Correct. Similarly, so option sellers who sell throughout the month, they face pain at the time of expiry. Because at the time of expiry, only one thing happens: money moves from seller to buyers. Because throughout the month, sellers collect. At time of expiry, it is between money moves from sellers to buyers. It's time to refund them. Whoever is eligible, those who are having worthless don't get anything. Those who have something, we get it. Correct. That amount which is paid back is a pain to the seller. So that is considered to be an option pain. So what it's also, so throughout the month they are collecting. At the time of expiry they have to pay, because if they don't get anything at time of expiry, at the time of expiry it's payout time. Obviously, if option sellers are intelligent, what should happen? Whatever they collect, they should pay out as little as possible. So wherever their pain is going to find a minima, that point, if we can recognize that point, then we will get an idea where they expect the market to expand. See, if I am option seller, I will always move my position in such a way. When I am not on normal option seller. Option seller means institutional level, where I sell huge number of options. I sell a lot of different OIs. I sell throughout programmatically. I am selling it regularly, huge quantity. I will always make the center of gravity of my sale at a point where Nifty will expire. You know why? Because there the lowest pain will happen. If I sell too far away from it, then I may have a lot of pain. You understand? If I sell option which are deep in the money, then I have a lot of pain, right? I will sell as closer to the expiry. That means my center of gravity, my average selling should be such that my pain is minimum. So we do this reverse way. We can't figure out from their software now where their pain is showing, what they expect the Nifty to be. We do reverse calculation. We know that because of their software they are selling in such a way. So we look at what they are selling to figure out where is the minima, to figure out what they are expecting Nifty to go. It's a reverse calculation to figure out where they expect Nifty to go, and that becomes our trend line for Nifty, because it will be you, and when you plot that, we find it one of the best trend line you can draw for Nifty, because it will just follow the actual Nifty chart perfectly, and whenever the crossover happens, it becomes a significant event, because either it should immediately take support and bounce back, that means the trend continues, or if it breaks down, that means the trend is going to reverse, because that means now they expect because Nifty will move faster than their software also track. So it will be always be a lagging line. It will be like a trend line of the. So this is used to see long-term trend. It's not for short-term. Short-term it can correct. But what will happen if short-term it is correcting and they don't expect the price to bounce? What will happen to Nifty pair? It will go flat. They are not following it. They are static. They are not changing any positions. If they don't change position and Nifty is moving up and down, that means they are not sure where Nifty is moving. So they are holding on. Nifty is going here and there. In such a case, Nifty will take support and probably continue the direction in which it continues. So we look at this to see the trend of the Nifty. This is a, you had tools for support resistance, you have tools for pattern, now you have a technique, OI tool for looking at trend. And how do we see that? We see from option pane. So option pane is this. So at this point also long term, medium term trend in Nifty is above only. Because the option pane is still not gone, spot is still above only. So when I am clicking this, I am showing you. This is how it's looking. See, for a long term, they are holding their position. Nifty went up so much, they never followed it. They are holding at 9,100. They are still holding 9,100. That means very high probability Nifty will expire somewhere around 9,100 at this point. Or because what will happen is, at the time of expiry, they are very good in one thing. They will always see, even Nifty went to 9,200, they are still holding 9,100. So if Nifty corrects, it should come back somewhere to 9,100. At 1,100, it took support because that is where they expected anyway. So it is taking support. The question is this: where will Nifty expire? They are very, very clear in this. They always end up moving their average point in such a way that the end point when the market closes on the last day expiry, the difference between their close, their average minimum point and Nifty close is less than 1%. And all the time, I have never seen. Very rarely I have seen. Means I don't remember seeing where their point is very much away from Nifty. That means they are able to very closely track Nifty and make their positions like that. So if we track this line, we can track Nifty.
1% hedge, what will be
plus minus 1% of that.
Minus also.
Plus minus 1% of that. It will be because they will be just above or just below. So it
of the red line.
So of the red line. Red line is their average. See, for last 20 days they have not changed their red line average. That means they have not changing in any average positions. Their center gravity is 9,100. So if somebody thought it was looking very bullish, definitely not. This is not looking very bullish. It has become flat. So Nifty is not at all bullish. So this is definitely not bullish because this will follow it. So now if this trends, then it is trending in line with the Nifty. If this was trending, see it was trending, then this is also trending. If this trends and this is not trending, then it will stop at that point. It acts like a support resistance. It's like a perfect trend line for the Nifty. You see, Nifty takes support at the trend line. Now it is at the support. If it breaks and if it turns down, then it is going down. If the yellow line turns down. If yellow line does not turn down, then even if it breaks, it will come back again. So at that end point, so you can check for any old months. The best thing is go for old month and check what has happened. Historical analysis. No. Yeah, we'll check for all the months. We have got 40 and 50 months record. No, but I'm just trying to give you. See, yeah, so basically what I'm saying, see, it's just acting like a perfect trend. So you see from this date till this date, there is no crossover. It means the bullish crossover happened much earlier. So almost the crossover, it's best moving average crossover you can get. Because whenever the crossover happened, maybe in February it happened. You can go and check. Because in March also it was above only, right? There is a point it would have gone below from above to below. There will be a crossover. It's like a moving, it's a trend line.
Can you scroll again?
Yeah, I'm scrolling. So in March also, in February also it was above. So February also it was bullish. So let's go to, it's a long-term trend. You understand?
Is that the end?
Yeah. Oh, yeah. You can. One second. Actually, you wanted to see the close price, how it closed. Okay. Okay. Like this, within 1% of each other. 39 points of each other. It is always less than 1%. They always end up. So I am going to January because till I have seen in 3 months there is no long-term crossover. So that trend is up from long period of time. This is a medium-term trend. So somewhere here it had happened at 8,200. Before that it was above, this was below. Now if you go to December, you can see it was above, this was below. So that means from that 4th January till date, if you combine all the Nifty option chart, the Nifty 8,200 till 9,200, still the trend is upward. Medium term trend is not turned down. So the day it turns down and it starts falling down, then it will become upper side trend line. This is like a long-term average because this is not based out of moving average. This is based out of the OI. This is like a long-term trend line for Nifty. So it's like you can use a medium-term average. We use for like average. You can use even option pain as a medium-term average. As long as option pain is below, buying is a better strategy.
So in case of downtrend, will there be a similar?
Yeah, similar. Yeah. There will be similar. It will start falling like this. Yeah, same. It will keep falling down till it will happen.
Not a sudden drop.
No, just how it happened here.
Yeah.
It kept on going. It will keep on falling. It will just track it perfectly. It is one of the best trackers you can get because this is not created out there. It's like tracking the moving average of the FIS software.
But this for all the
like this.
All the sellers, right?
Yeah. It was down only, and from December it was going down, na. So it was. See, trend line is this is up, this is down. Till January it crossed, na. The trend line was down. You understand, na? Till January the trend line was down. It was not trying to go up. It was still down. See, the blue line is below the yellow. So I am saying the yellow line crossed over only at 8,100 to 8,200. Till that time, this is down. So it shows what? So here it is following. See, when this happens and this is happening, that means you expect more down because they are also changing their position in line. See, option traders are very smart and they end up becoming very close to each other. So when you are very close to expiry, now you can almost sell any option within plus minus 3% away. You will be pretty safe because it will close within plus minus 1%. Now you sell 2-3% away from it. You will be in safer side because you know where it is going to close. So next 4 days you can track and you can figure out how it is going. If they start trending, like suppose this starts moving up and they start moving up, then it's trending. It will trend because they also correct in line with the trend because they don't control. Nifty is too big for anybody to control. They are the best to track it. So it's not that they can control it because huge entire market has to participate. What they are good is they track it perfectly. So the moment they realize that it is something that, and that's why, so we are using it like a tracker. Like suppose it went up, this didn't bounce up, nah. It is actually negative. It's saying why these guys are not increasing. That means maybe it will pull back. Because these guys also should change, nah. They should also start believing this will go. If this rise means it will go here, then these guys also will follow. These guys not following is not a bullish line. It's like this. See, their lines are very flat and less moving. Nifty is available, but these guys dropped. Like that, you go to October, November, and you can see similar behavior. You understood? So we saw last 6 months, na? This lacks like a trend line. So that's why I plot there whether spot is above or below, so that if it goes below or above, at least we should get information. See, it is going down, and this is going down. So from 8,600 market went to 8,000 level. That time the trend line is down, and then it crossed at 8,100, 200 level, and then from that time till 9,200 trend is up. For months it will be up. It's a medium term trend. It's not short. Short term there are corrections, right? It's not tracking short term. It's a medium. It's like monthly. It's tracking. So this is a big. So moving down or moving up, and option trader following it, they also believe that now trend is up. So you see last 3-4 months, option trader only shifted the strikes up only. The targets up. They never shifted down. So that's why it was like flat, up, flat, flat. It's like following it. Just like your super trend or some kind of indicator. It's perfectly doing that. But it's not getting violated that frequently. Any other indicator might be violated. Okay. So this is a trend indicator of OI. You calculate it based on where the minima is, and we plot that to see. So if the market goes, if this is trending down, then expect more fall. That means because they have started following it, they also expect more fall. Okay, so this is your option pain tracker chart. So you can these 3 things which we use were all OI based. Okay, so let's come back to next one. So module C is now tracker. Now you have seen the tracker, your creator. Now how do you track and create, analyze? So custom creator. So let me just show this here. So custom creator is you choose this stock, you choose this buy, this sell, and you click. Suppose I bought this call, I sold this call. Then what I'm doing a bull call spread kind of. Okay. So it will make automatically, you can recommend whether bullish, bearish, neutral, or you're looking for hedging. So if you go there are options here. You choose bullish, it will tell you which option to. It will tell you all the bullish options. You choose bearish. So there we choose bearish option. So it automatically gave me a strike price. And then it will give me option tracker, which I can click. It gives me opposition grades, give me payout details. and when I can see the payoff below that, and then I will get, there is an option here. Can you see forecast calculator? If I click on the forecast calculator, I'll get this, where I can change the IV of individual price in the strategy. Okay, and I can see overall what is the net value of the strategy in forecast for a strategy as a combine. If this price changes, if the underlying changes, number of days changes, this changes, what will be the price of this strategy? I can forecast for a strategy, not just as a individual option. So this is an option strategy forecast calculator. Okay, so you have payoff diagrams, you have option calculator and option tracker. If you click on option tracker, so if you change this, see here I have changed 2 days target, so this became 62 rupees. The option value, which was 33 rupees, will become 62 rupees in 2 days time if I go to 847. That's what it means. Okay. Now same thing you can now add. If you click on option tracker, then you can add this. You can again edit this target stop loss as per your requirement. Then you can put a target stop loss for the strategy, and then you can say subscribe to SMS alert, means what it will keep tracking every 5 minutes and keep sending you an alert if in case a target stop loss on any of the option in the strategy or strategy as a whole has reached, you will get an alert. And then you can see these things in your strategy. Open positions. Under open positions you go, you can check all the open. You can have multiple open positions at any point of different stocks, different indexes. Okay, and so this is an example of a call. So long call was bought, and the target was kept, stop loss was kept, and then like this, and the call was bought, and you have put a target stop loss of for the stop option for the strategy like that. And then you have option alerts. So next thing is you can create an option alerts. So here you can create even option alerts on price, IV and OI. If the OI goes below this, remind me, it will remind you. So you just put options, you put the whatever option strike you are looking at, and then you can put a for price target, you can put OI target, you can put IV. Means you can set up screener for that. If the OI or IV crosses a particular value, you will get an alert. So you can do for any setup alerts for any one of the option which you are like, suppose this option goes there, please remain like that. And you can put subscribe, you can put a date, till date, that date it should be tracked. So obviously till the expiry date is maximum you can put. Okay. So, okay, now so far I have shown you how to use this software on option side. All these were option tools which I showed you. Okay. Yeah, so let me just summarize the option tool. So you have dashboard. In dashboard you go, you get everything. Everything is available in the dashboard. Your put call ratio analysis, your option pair analysis, your IV analysis, your different charts, your Greek charts, your add. If you want to calculator for add the money strike, you can calculate here. Add the money strike calculators are there. Add the money option. What is the option that is shown here? It also gives you very interesting two things here. Based on the option IV, what kind of targets you can set. So based on the IV, same thing. A 31 points intraday you should move. 72. These are basically the IV is taken, implied volatility, and converted to daily values, weekly values, 2 week values, and then based on that, because that's what market is anticipating with a very high. So if you this can move, so basically this becomes positional target for 2-3 days. This becomes weekly targets. If you are doing weekly based trades, then you should look at this kind of. If you are short trades, you should look for this. Intraday, you should look for this. These are high probability targets to be achieved, because market is placing a high premium for these kind of close targets. That is, and second, it tells you two things: where the option prices strike, you can buy and sell. See, greater than 9,050, you should buy puts. Anything less than that is lottery. These are closer to add the money puts. That's why it's trying to do. Anything less than 9,200 call is you can buy calls. Anything more than that is not worth. Similarly, for sell, it tells you sell anything below 8,900. Sell anything above 9,350. These are safe levels. So which options to buy, which options to sell, it tells you the range. For any stock, you can see this. So if I am doing short strangle, I can just click here, these two will be shorted. If I am doing long strangle, these two I will buy. If I have to do individually, I can do that. If you combine any of these two, you will get delta close to 0.0. Here also you combine, you get they automatically they will become delta neutral. So you don't have to check each and every option. This is automatically suggests the ideal optimal option straddles for every stock, every time, any time in live market.
Can you try for Reliance?
Yeah, I'll try this for Reliance.
Okay. So just scan through the options chain. And
correct. Correct. That's what I did. Because in the end, after I used to teach everything, still there are lots of analytics a person if manually has to do. So this dashboard becomes one view dashboard for everything he has to do. He does not have to go each and every point and saves your time and energy. So IV is normal in Reliance. It's like turning up. So your short-term trend is likely to looking up. You have an event coming, like you said, on Monday. And you can buy a long triangle at this point of time because the normal IV is there.
Take a position and save it so that for subsequently can track.
Okay, so let's take a long triangle. So I'm taking a long triangle for 2 days position because IV is normal, result is likely to come, it is likely to go up. So let's say, see delta is less than 0.03. Okay, so it's as close as to 0. So it's a delta neutral strategy. Now what I'll do, I'll use it to forecast calculator. So let's forecast it. Right now the value of the option is 22 rupees. Oh, I didn't show you the payoff. Okay, right now total value of in 1 day time it will become 18 rupees. So let's say after the result it becomes 1500. Let's say it touches. Let's keep a target. So what is the price of the option will be? 66 rupees. Or it falls and reaches 1300. Either way it can happen, right? So no. Then also it will reach around 70 rupees. So you know that if you are right now you are at what is the starting price of your option? 22 rupees. So it can go around 66 rupees as a total either side. So that becomes your target. Yeah, it can move. If it moves 100 rupees this side, 100 rupees that side, because of that breakout, whatever happened, and this is how it will look. This is your long triangle. This is intraday. This is end of day. During the day it will move like this. And then end of day, every day it will shift. This is your end of expiry strategy. Okay, now if I am buying this, I'll add this to option strategy tracker. Okay, so when I click option strategy tracker, okay, so now instead of keeping this as because why will I have bought long call and long put, right? So my stop loss I'll just keep it at 1 rupee here. Okay, and what's
380 put selling. 380
yeah.
call we're selling.
Yeah, so I'll put 1 rupee. Yeah, no, we are buying both. We are buying 1380. We are doing long triangle.
Yes.
Okay, and I'll keep the target as 30 and 30 on either side. So whichever side it will hit, I'll get out in profit. Okay, so I've done this, and now I will do save strategies. My total investment is 11,075. Okay, nil delta is same. What you can see there, here you can see. Here also you can see options forecast calculator. If you have used here and payoff chart, if you click here, this also will open payoff chart. Same payoff chart which you are seeing there. Okay. So now I have clicked there. Na? So first let me finish this. Subscribe to SMS alert. So my target is if I make 30 into what is the lot size? 500. So if I make say square this off at 15. 500, 30 into 15 is 500. Correct, na? 500, right? Or if the loss goes, if it falls below, say 15 rupees. So 15 into 7,500. Okay. So either if I lose 15 rupees, 7,500 less. So I'll save. So now this strategy has got saved in my account and it will be available in my option strategy. So this becomes my open position. At this point of time, there is no profit loss. On Monday, it will start changing. It's like I've opened a position. And whatever my target stop loss is available here. Whatever I kept. Stock wise, overall strategy wise, and okay, if I want to edit this, I can obviously edit it. I can square off. I can manually close it. Suppose I'm sitting on some profit, I want to manually close, I can close. So this is a strategy for 2 days time. In 2 days time, I should come to one of this. One of this strike will hit, I'll get. Because there is an event, volatility is low, so I can afford to buy option. If it is above normal, I will not have. Since it's showing below normal, it's still at normal, and I'm looking at that, and the stock is disturbed. So I can create this, and if I want the position, these are like example, all the positions which I have closed earlier will appear in closed positions. So example, these are the positions which will appear in your close positions. If you bought anything, if you sold anything, like this. So this becomes your paper trade or whatever you have done in life, like that. So this becomes like that. You can create a option strategy. So now you see how you use creator and all that. So this
some of these are closed ones.
all these are closed because all came in closed only, right?
Yeah.
All these are closed positions. These are open positions.
Okay.
These are closed positions. Okay. And this will fluctuate every 5 minutes as per that. Because I have chosen that subscribe to SMS in email alert, na? So it will automatically change. If you don't subscribe to SMS alert, then there is a manual change button. You click that, it will update. If you put for automatic SMS, then it will itself calculate and change everything. Okay. Since I have subscribed to that SMS, I click on that SMS alert. So now this will get created in my account. So this became a sorry. So this became an option strategy creator. So I can create like this. So I had a view. I saw the IV. I saw which strike price. So it took so much less time because now I don't have to search which IV, which option, put, call. How much time I did? Hardly everything is combined inside. Because the moment I had a view, I could easily. I just needed to forecast. I needed to figure out where the target supposed to be kept. Because it's a breakout strategy. Now I have to book profit at some point. So I needed to figure out what I need to keep, and then I just figured it out. And so you understood. So this is how you can use the option tools to create any strategies of your choice in the account. Okay. So and it's all available under option also. Now you can through dashboard I go and do it because everything is inside. If earlier everything was separate tool, so that is also available. If you go to option ads, if you go there, you can see there are all separate tools are also available. You have option pane analysis, option pane, put call ratio, option tracker, create option strategy, calculator, and then various FO analysis. So basically what you are getting here, I am directly seeing as an individual page. You go to an option analysis page, you get option pane page, put call ratio page. All these pages are inside this dashboard. For me today, dashboard has everything what I need. From there I can start whatever I need. If I need all the option chain, I'll go here. If I need to create a custom strategy, I will create. This is for creating that. If I click this, it will open that creator where I can search. It can suggest me. Like suppose if I go and ask it, I can go create a like I want a range bound strategy of I want a anywhere outside strategy. Then you will say long straddle or long stagger. Then it will also execute strategy. It will also suggest. Oh, I didn't select the symbol. So if I do Reliance, this also will create a strategy. Okay, so this will also create a strategy. You will say sell this, buy this, like that, 1,420 and this saying you can do that, 1,380. So this is the one it will do. I will go and do it from here also. So if I have a view, I can look. Suppose I'm looking for a bullish view. So I'll say I want to do a bullish view in Reliance. Suppose, or then it will give me a bull call spread, execute. Then it will automatically create a bull call spread. It says buy this long call, and it will say sell this call 1420 like that because it's only 2 days now. So basically I can buy a 1400 call also because it's 4 days option like that for 1 day time if I want to trade in option. Okay, so if I'm doing, so you can use various things in that. So it gives you various suggestions based on this. You can always change it. Suppose I don't like, I want to buy 1380. I'll buy 1380. It will change the LTP. This is last LTP. Then I can change my stop loss target, whatever I want to keep separate as per my requirement. We suggest a standard stop loss of 20%, like keep it. It suggests, but you can always overwrite your choice. It gives you a default choice that if you are buying 35 rupees, your stop loss should be around 7 rupees, target should be. It has an inbuilt understanding where normally it moves based on the target and what. So this is what it expects you to do if you are doing on your own. Otherwise, you can always say no, I will keep different stop loss, different target. You can edit it. Your entry price may be different also. Suppose you show 35, but when you enter it was 36. So you can edit it. You can make it 36. So you can save as 36 in the strategy. All these are editable as per your actual trade. If you are tracking some actual trade and you want it to mirror the same thing, then you put that value only. Okay. So all this is editable. So you can use option strategy creator from this, option strategy trade, option chain analysis from this, or you can open the dashboard like I did. And dashboard has everything. If I click here, it will open the option analysis page directly. If I click this, directly it will take me the option analysis page. Okay. If I see it, and then I can scroll this to see whatever option I am looking for.
So what was the stop loss percentage?
Stop loss percent was 20%.
20%
of the premium. It has gone below
target
the
was?
target was around target was in line with what it expected to happen. That is based on the intraday targets and all that. So it figures out. Yeah, kind of. Yeah. So you're expecting, because you're trying to buy an option, you're expecting it to go that much. Na? Minimum target you expect it to double kind of stuff. Right? So these are things which you can do. So otherwise you can click here and this will make a triangle. That also makes a triangle. Okay. So this creates a thing. It shows you the important support resistance. So I said either it will go there or right now it is turning away around support because it's trading around 1400. Support is around 1400. So it's moving up to 1400. So if it break the support, it will go to 1300 or it will go to the next resistance 1500. That's why I'm saying either it will go here or it will go there based on how the event pans out. So I'm trying. If it does not go within 2 days, then I'll close the trade anyway at whatever. So now, whatever is there, whether it's profit or loss, minor profit, minor loss, anything else, depending on how much. Suppose it go to 1480 or 1414, then different value will be there. Na? It's a trade event. It event. Once that event didn't create anything next day, then by end of next day I'll be closing. So it's a straightforward strategy and easily can be traded without having blood pressure. What the lines is going to do? Okay. So that is the whole idea. Okay, and the short-term trends is turning up in the line. That's what it is. So you can just trade on anything, and you can figure it out. So if I just did say you had somebody else some other thing. So if I do Maruti, then it will say so short-term trend is turning down, and long-term trend also is probably turning down, and IV is still normal. So here I will look to have a bearish strategy. Now you can apply this, or you can do directly from the chart also. Okay. So this is technical analysis. This is option analysis. And this is different from your technical. Okay, so we have used all the option tools. Can you see all the option tools we use? So all these option tools can be used to trade and now we come to the last question. How do you use TradersCockpit software to generate new trades? Instead of, like suppose this is the things which you know. So here a simple thing is, don't expect if some software is doing, are you searching for close to 100%?